Good morning, traders. It's Monday, March the 12th. Taking a look at the charts. Start off with the SP 500 daily chart here, and today we're seeing equities trade a little bit higher on the session. And more or less, we are trading up to some highs as of Friday's close. We were trading right up at the highs from about 10 trading sessions ago, 2 weeks ago. And the last time we got up to this level, the market had switched more or less. You can see over here it switched from a red candles here, which means the bias is to the downside. Then it went orange, which is the sign that it's slowly turning into an uptrend. And this is where it was on the 30-minute chart. So this right hand is a 30-minute chart of the SP 500. And from there we saw it sell off, and now we're back up at that level. Today we're in pre-market. We're trading above that level. We'll see if we can stick and hold above it. More or less, we've got upward bias with our longer term cycles here. We've got April 14th and 15th still being the top for the longer term picture in the market for a cycle, a short term cycle top. This doesn't mean the markets are rolling over. We're starting a bear market. It just means we might see a little bit of a pullback, consolidation before it chops around, moves higher, and probably rallies to new highs. So here is the previous top. Here we are now struggling or trading at that previous top. And if you look at the 30-minute chart, here we are there. Again, 2800 is a whole number. It's a resistance level. There will be lots of big traders saying, okay, if it gets up or close to 2800, I'm closing my long position and going to get short. And the fact that it hit here last time and sold off, we could see that happen again. And the way the market's moving this morning is the market is set to gap above 2800. The market has a way of finding ways to bridge and get around resistance for the big guys to unload. So it's going to gap higher. It's going to create a gap, which means gaps get filled. And if we were to look on the chart, we would have some type of little gap window in the market like this. We also have a fairly significant gap down here. And to add to that, we have the market as of Friday closing above this blue line showing panic buying or more or less short covering, greed buying. Either way, whatever you want to call it, everyone was piling into the stock market on Friday. And when we see this above 3, which it closed at 4, we usually see a short-term top in the market. Last time we had a little bit of that. The market closed above 4. We saw it top out, and then it pulled back, chopped around for a few sessions to stabilize and regroup, and then it took another run. So here we are at resistance again. So it'll be interesting to see how that plays out overall. Again, the trend is to the upside. You can see the bars are now green. We're not really looking to short the market. We're looking for a pullback down into an oversold level to buy the dip. And really, the last several weeks here, since the big market sell-off, the market's been chattering around with mixed signals. It's flipped to downtrend, to neutral, to red, and it's in this kind of whirl whipsaw price action. But we're starting to get to this level here where the market is starting to stabilize. We've got the 20-day moving average now moving up. We got the 5-day moving average moving up. And we're starting to get back into a trending market, and the VIX is close to fading back down into a low volatility level. And so what we're looking at going forward is we're looking for some type of pullback, potentially to the 5-day, which could give us potentially, depending how it pulls back, an oversold buying opportunity for it to continue to rally and push higher. More or less, you can see the 5-day moving average, this baby blue line here. When the price is above it, we're usually in a nice strong uptrend. When it gets below it, we're in a downtrend, and above it, you can see once you start to get mixed signals where one moving average, the 5 days moving up, the 20 days moving down, price starts to chop around it. And now we're starting to see them both slope up. 20 days up, 5 days up, cycle is up, and we are now into these green bars indicating we are into a trend. So that's where we are in the grand scheme of things, looking for a new entry point now that the market has shaken things up. We're looking for a new entry point to get into the equities market on some weakness. Taking a look at the chart of bonds, here are bonds. You can see more or less they've been grinding lower. Our trend indicators telling us we're still in a downtrend. Everything is red. Now this is a 30-minute chart on the right hand side, so we got lots of price gaps. It's pretty squished in there. I could Zoom in a little bit, but more or less, you can see how we're stuck under the 20-day moving average. More than so, we're stuck under the 5-day, and we're just kind of grinding it out. You can see potentially we could see some more downward move or some sideways move in bonds before it potentially maybe puts in a nice rounding formation. We might see some top pop and rally up into this 47, 48 area, maybe a little bit higher. But again, downtrend, and it's under pressure still for another week and a half from the looks of things. Looking over at, let's take a look at the Toronto Stock Exchange, TSX. It's been holding up fairly nicely. It's recovered. Obviously, we had a pretty good sell-off in metals. We had oils pull back as well. So it's been shaken up a little bit, but shows that looks like we've got some upward bias in the commodities, more or less, which the TSX is very heavy in, and it's holding up fairly well. We'll see how it unfolds, but more or less we got the 5-day sloping up, 20-day sloping up, cycle moving up, and it looks like it's going to have some strength going forward. Taking a look over at the chart of let's take a look at the US dollar index. US dollar index is still holding up here. We've got over the next couple of days here, we could see the dollar kind of top out a bit. We could see it start to move down, but more or less the cycles here are kind of narrowing, meaning there's a lot of mixed signals in here, and they're starting to neutralize each other. Really, what we want to see are big swings in the cycle, nice strong movements. But really, the fact that if you look at the highs and the lows on these cycles, they are kind of squishing in here, and that means there's a lot of neutralizing going on. So as one cycle is coming down, there's another cycle moving up to kind of neutralize these things, and they're crisscrossing, which is why we've got this sideways kind of chatter in the US dollar index. And ideally, we're looking for a breakdown, which will send commodities sharply higher. TSX will rally, gold, oil, natural gas. We can see all those things start to take off to the upside. The trend is down for gold, or sorry, for the dollar. And this at this point is seen as a consolidation, a continuation pattern, which means lower prices going forward. Taking a look over at gold, down about 0.5% this morning, continue to chop around. The cycle analysis updated here shows we could have some downward bias here. Doesn't mean price is going to actually break down and sell off. It just means there's going to be some selling pressure to the downside, and we'll see how that slowly unfolds. You can see on our cycle analysis, gold a couple days ago when it had that pop, it did have a very nice measured move. It went from an oversold gap, had a pop, did a really tight bull flag, and then had a 100% measured move up into this overbought territory. You can see these red bars indicating it got overbought. It was a short term, and then it's pulled back. And now we're going to orange bars. So we've gone from orange to red, which is down. Now we're back to orange, meaning it's starting to neutralize. We could potentially see the market gold start to move up. 20 days just started to move up. The 5-day is moving up, but we are still trading underneath this 20-day, and technically we're underneath the 5-day. So we could see some more chop and volatility. We might test these recent lows as the market struggles over the next little while here. Again, as with the markets kind of trading sideways in the US dollar and gold here, cycles start to kind of not become as relevant. We're looking for a breakout of these patterns, and we're looking for how the cycles update and go from there. So right now, we're kind of neutralizing here, consolidating with the dollar and precious metals in general. Looking over at crude oil, down 0.75%, continues to kind of flounder down here. It's kind of consolidating after this nice rally here. It's been selling off for a couple weeks. We got a bias here to the upside. We might see a nice continuation move in the crude oil. If we put a Fibonacci extension, we can go from these lows to this high, down to these lows, drag it forward. There is potential for crude oil to put in a leg higher up to the 618 retracement. If it pauses and pulls back at that level, typically means we're going to hit that 100% measured move, which could put in a pretty major double top. We'll see how it goes. It could actually break out and go beyond there, but this is where the measured move is potentially bringing us, which is this recent high around 64, and then up here to the 66 and change going forward. Looking at natural gas, up 1.9%, starting to really pick up speed this morning. If you pull up the intraday chart this morning, I'm not sure how far down you can see on this chart, but more or less it's consolidated for most of the morning, and just recently in the last, each one of these is a 10-minute chart, so in the last 2 hours we've seen a real strong pop in natural gas. We're seeing some nice movement there with natural gas, and we are trading, we are still long UGAS for a potential run here. If we can get a breakout from this level, if we take a look at this chart, draw a line right across here, this is a pretty significant resistance level. And let me just squish the chart in a bit more here. You can see this is a really significant, actually if I keep going back it's even more significant. You can see this really significant pivot level in the market right across here. There's a lot of price action where significant low right in here, another significant low, consolidated for 4 days through here, broke through it, tested it, broke through it, and we're back up to this level. If it can break here, this is the pop we're going to be looking for, or we have been waiting for, is this final pop, potentially up in price into this 3 range, potentially 310 range going forward. This is where we can really see a big significant gain on our UGAs, potentially 25, 35, 40% gain or more if we can get this relief pop. But we need to break this pivot point in the market. And we took money off a couple days ago, around 9.5%, 9% or so, depending where you got out. But more or less, it's taking a run back up here. And if we can get a pop, we're going to see a pretty significant move in the UGAS, which is what we've been looking for. Last but not least, let's just jump over to the GDXJ. We are long GDXJ. We got long right over here. After a nice impulse move, we got long down here at the this consolidation. It's been chopping around, trying to find some ground. Cycles show that it's going to continue to chop around, which aligns with our gold cycles, which is a little bit under pressure. Looking forward here, we are continuing to see a little pressure. There's potential here. We can see this run back up into these recent highs over here, which also were the highs over here. And that's the move we're looking for. We did trade the Dust ETF. We played this downward move, and now we've got this impulse move to the upside. Trend has just started to flip. If you look on the right-hand side over here, we've gone from red bars, a downtrend, to now we are in potentially an uptrend here, or more or less a neutral trend, but on its way to green bars. So from red to orange to green bars, and we could start to see this rotate up, but we might still be under pressure here for another week or two. The markets always have a way of trying to shake you out, and they take a lot longer than you anticipate for moves. In many cases, it's just the way the market is. It's very hard to time it, as everyone knows, so you just kind of play it one bar at a time and reanalyze on the fly as you go. But that's it for this morning, and we'll talk to you in a little bit. Bye-bye.